All right, so I'm going to work problem PF1-44A. Student asked me a question about this one, so it looked like a really good one to just do a video and add to our bank of videos that we already have. It's question number 8 on homework 1. Okay, so this one can be a little confusing because they didn't give you this capital of the end of that capital. But remember, there is a way we can back into this. So the first thing let's do really quick is let's go through each one of these and decide what type of account they are. That's going to make it a whole lot easier for us to do the income statement, statement of owner's equity, and the balance sheet. Okay. So insurance expense, that is an expense. Cash, that's an asset. Accounts payable. Remember, anything with payable at the end will always be a liability. Sometimes I just save time and I just run over here, find everything that's got payable in it, and go ahead and mark that. Okay. Advertising expense is an expense as well. Service revenue, it's a revenue. And then we have withdrawals, which is going to be on the statement of owner's equity. Okay. Accounts receivable is an asset. That capital is going to be on the balance sheet as owner's equity, but we're going to find that at the end of the statement of owner's equity, okay? So I know y'all are so used to just working these things forward, you might not realize you can work them backwards. And in accounting, they do that a lot because they think that if you can work it backwards, you can work it forwards really well, okay? So then we have salaries expense is an expense, equipment is an asset. And then the owner contribution, I'm going to put owner's equity by that. Okay. So the first thing that you want to do is do your income statement. Okay. So the name of this company is Superior, I believe. Yes, Superior Photography. So the first thing we're going to do is get a heading. Okay. Name of the company, Superior Photography. Okay. Name of the statement, income statement. It's the first one. Okay. And then we're going to date it for the period ended. And they told us this December 31st. Let's say, okay. And I believe it's for the year. Okay. For year ended December 31, 25. Okay. So now what's the first thing on our income statement? It is the revenue. So we have service revenue of 80,000. And then we have our expenses. We already know what they are, and this is why it's really good to label all of them because then you know you're not going to miss anything. Okay, so you got an expense right here, an expense there, and an expense there. Okay, so we have insurance expense. Get that down. Insurance expense, and that was 6,000. And then we had, I believe, advertising expense, and that was 5,000. I have a few of the numbers wrote down on a piece of paper here, so I'm not having to scroll up too much. And then we had salaries expense of 25,000. Okay. If you totaled all those up, and I do think my accounting lab wants you to put that total in right there. You don't necessarily have to write over your total expenses, but all those expenses are going to get subtracted from that revenues. And so we end up, let me draw us a line here. We end up with net income because our revenues are more than the expenses. We end up with net income of 44,000. Okay. All right. So now let's dive into the statement of owner's equity. Okay. The statement of owner's equity just bridges the income statement to the balance sheet is really all it does. Okay. It's gonna date it, still gonna be dated Superior, I'm sorry, named Photography, Superior Photography. Name of the statement, this is the statement of owner's equity. It's gonna be dated exactly like the income statement for year ended 12/31/25. Okay. So the first thing we want on here is the owner's equity beginning balance. They didn't give that to us, which is okay. All right. We're going to back into it, but that would be January 1, 25's balance. Okay. I like to draw a little box for numbers we're looking for. Okay. Makes it a little easier to find them because you see that box right there. All right. The owner put in contribution of 29,000, which gets added to the balance. So I'm just going to put a little plus sign there just so you know. We're going to add the net income that came from the previous statement we just did, the 44,000. We're also going to add that if we had had a net loss, we would be subtracting it. Okay. Withdrawals will be 13,000. And then we'll have owner's equity ending or 12/31/25. They didn't give us that number either. Okay, but that's all right. I do realize in my accounting lab, it won't let you go forward to do that balance sheet, but you can always use a piece of paper. And you don't necessarily have to make the balance sheet look in good form or anything like that. I just scratched out the few assets that we had, put them on a piece of paper right here. You can do the same because I do realize my accounting lab won't let you go forward until you get this step right. But we're going to move forward anyway. Okay. So let's come down here to do the balance sheet. Superior Photography again. This is the balance sheet. The balance sheet is going to be dated differently than the other financial statements. So it will just have one snapshot in time, 12/31/25. Okay. So we had some assets. I have them wrote down, so I'm not having to scroll up and down. We had cash of 37,000. This looks a lot nicer than what I wrote on my piece of paper. Okay. Accounts receivable had 8,000. And we had equipment with 50,000. Okay, so that gives us total assets of 95,000. Okay, now we're going to come over here. We had two liabilities and we had accounts payable of 7,000. And we had another one. I didn't write the name down. Let me go back up here and look really quick. We had our notes payable, which was 12,000. Okay. So just over here in the margins, I'm going to total those up because that is 19. I got enough room. We can do a total liabilities of 19,000. Okay. What's going to make us balance is that capital account at the end of the period. Okay. So capital 12/31 ending, I'll just do ending balance 12/31/25. Let's draw a box here because we are looking for that. Okay. We know that the total liabilities and equity has to equal 95,000, correct? Okay. So total liability plus our owner's equity has to be 95,000. So I have my calculator pulled up right here. So we're going to come over here and we're just doing an algebraic equation. If it had been an algebraic equation, y'all could have probably answered it. That's okay. So we had a total of 95,000. We're going to subtract out the 19,000, which is our liabilities, which makes our ending owner's equity 76,000. Okay. Now we're going to go backwards. That's this number right here. Okay. So that's 76,000 is the ending. Now we're just going to back into what was the beginning owner's equity. Flip my pieces of paper here. If you think about this line right here being an equal sign, so if you say beginning balance plus contributions plus net income minus owner withdrawals equals 76,000, it is just an equation you are solving. The way I do it, way I put it in my calculator is I'll start with the 76,000 and then I work backwards. I work backwards. So remember the opposite happens. So this would have been subtracted from that number. We're going to add it. Then we're going to subtract those two. So let me get my calculator here and show you. We got 76,000. I'm going to add 13,000. I'm doing the opposite. Subtract 29,000 and subtract 44,000. That gives me $16,000 in the beginning balance of owner's equity. I would not recommend just going with that answer and being done with it. Okay. I recommend let's put it in here. So let's look at 16,000. Let's add the 29,000. Just like an algebraic equation, we put the variable back in, make sure it equals the ending, and then we're good. Okay. And then subtract the withdrawals, and you still get $76,000. Okay. So I'm going to jump over here really quick and show you in my accounting lab. So I just pulled up show completed as I was working through it. I do realize that it won't let you see that balance sheet, but just on a blank piece of paper, just say, hey, my total assets for this, my total liabilities for that. I know they've got to equal. Okay. So that's how you back into some of those numbers. That, I mean, there's lots of ways they could throw this at you, but just remember, it still goes in order of the preparation, but they left a number out, so they forced us to back into it. And we can do that. As long as we don't have too many variables, then we can do that. All right. Well, I wish y'all lots of luck on this problem. Please let me know if you have any other questions.